Thank you, and thanks Neil for coming back again to talk money and investments.
Hey, it's
once
springtime.
Again. That's right,
Let's
it is.
talk money, right?
Yeah, you got to do that. So it is springtime, so we're approaching the halfway point of the year. So maybe this is a good time to kind of look back at 2022, give a bit of a summary there, and a backdrop as to what that means for 2023
Sure.
Going forward even.
Yeah. Let's do a little bit of a quick recap, at least on 2022. Obviously, the period of low interest rates ended with a bang in 2022. Due to lots of inflationary pressures around the globe, those days of low interest rates have now kind of ended. In Canada alone, we've seen interest rates come from a base level of 0.25% to now 4.5% here from the bank rate standpoint. In the U.S., they're north of 5%, like 5.25% now around we are today. So it has moved substantially, 4 or 5 times the amount in the last 8-9 months. So man, that had a major impact on the markets, on the economy, as corporate earnings are trying to adjust to this, corporate profits are trying to adjust to this. Most people's portfolios, you would think, well, okay, that doesn't maybe have that big of an impact. Well, it did have a big impact on your fixed income and bond portfolios in most balanced portfolios. Again, a balanced portfolio has anywhere from 30 to 50% fixed income. And the fixed income rates now, Yahoo, they're moving north of 4% into 5% territory. But that adjustment from a 1% to 4 or 5% was a big shocker on most people's diversified portfolios. So that was the kind of how 2022 ended. 2023 now, of course, as the market adjusts to this, we should start to see eventually some growth kick back into the market here. But again, there's definitely some cautious optimism here in 2023. We've seen it be choppy to start 2023, and probably that will continue for most of 2023. Maybe in the latter parts of 23 is when most analysts are saying that we could see some positive momentum kick in. But yeah, a little bit of cautiousness is definitely the kind of the word on the street right now.
Okay. With interest rates being high this year, like you said, what sort of rates on savings should investors be looking for?
Yeah, that's kind of the thing that we hear most from people is, oh, my savings account rate should be, in the current range now, in that 4% range. Most bank account savings accounts paying 1 to 2% still, so it's quite a bit lower than the current Bank of Canada rate. You really have to kind of dig out there to try to find a high interest savings account. They are available. You have to check with your advisor or check with your financial institution. Most investment accounts or brokerage accounts will offer a high interest savings account that is paying around 4% now. US high interest savings, closer to 4.5%. But again, you have to kind of dig around and you have to kind of ask to try to get there. The big thing though to worry about or to be concerned about down the road is, of course, with higher interest comes more taxes then again down the road. So that's something to keep in mind for 2023. As you collect more interest, you are going to pay that higher marginal tax rate on that interest, depending on where you fall for income tax purposes. But just be aware of that when it comes to tax planning for the end of 2023 now going forward.
Okay, and energy stocks, they recently reported their earnings, so and that's a major part of the economy still. So what are analysts seeing there?
Yeah, well, analysts out there, it was a little bit of a messy quarter, or the last few quarters in the energy space here in Canada, but there is some optimism going forward here. Even though the price of oil is around that $70 mark, the optimism is that it should get hopefully closer to that $80 mark as the year goes on. But as a result of higher oil prices, we should see some higher cash flows as a result of that. And a lot of companies are forecasting that. They're going to be buying back their shares, and there'll probably be higher dividend rates out there. So a couple of companies that most analysts have been focusing in around, just a couple names out there, Suncor, they've got a dividend rate of well over 5.5%, and they are expecting some higher cash flows. And Enbridge is another one out there that has some pretty good growth opportunities according to analysts, and they're paying over 6% dividends. So there is some optimism in the oil patch and in the energy sector here in Canada, and especially in Alberta here, as we move into summer and into the fall.
Great. Well, that's a lot for people to think about. Once again, thanks very much for joining me.
Thank you. Thanks.